Aloha YouTube, thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to look at 3 undervalued dividend companies that if you haven't checked these companies out, maybe this is companies that you want to put on your portfolio. These are companies that have been given investors dividends for at least 13 years. They're undervalued, and in my opinion, they're solid companies. So sit back, enjoy. Hope you like this video. Do me a favor, hit that like button, hit that subscribe button, and don't forget to hit the notification bell so you don't miss out on any of the videos that I put out. As always, please remember that all of this is not financial advice. This is just me sharing. Without any more delays, let's take a look at these companies. So the first company that I want to talk about is Nucor. Ticker symbol is NUE. For those of you that are not familiar with this company, it is a company that manufactures steel products. So they recently had guidance in 12/16, and they've also increased their dividend. So definitely go check this out. It is a company that's been here for decades. Let's take a look at Simply Safe Dividend. Based on their dividend safety score, they're rated as 90, which is safe, very safe. Dividend yield is 1.90. As you can see, valuation is undervalued. You look at the market cap is 27 billion. Looking at the key metrics, you can see payout ratio is about 20. Forward payout ratio is about 36. And then you can see here a dividend streak of 50 years without a reduction. They have increased their dividends during the recessions. And then if you look at the dividend growth, you can see the last 20 years, 12%. Last 5 years, 6%, which is average. And then your latest, which is very slow. Again, 50 years without a reduction. 50 years of consecutive increases. For the details, you get paid quarterly in the months of February, May, August, and November. Your annual payout will be $2 per share, which breaks down to about 55 cents. And then you can see right here some of the valuations. Dividend yield, forward PE ratio. As you can see, 52-week range is in the low, so the high will be 200. And then you got your PE ratio right there. And then financials, you can see earnings per ratio, earnings per share, earnings shares, sales growth, total sales, return on equity, return on investment capital, operation managed margin, free cash flow. Now let's take a look at Simply Wall Street based on their evaluation. You can see right here, trading at 37 below estimates, pay out a reliable dividend. And then some of the risks you can see, insider sales, profit margin, and then you can see right here some of the performance, and then you got your earnings, dividend. You can see right here, loading the dividends. You can see right here, dividend yield, payback yield, and then so now let's take a look at bar chart. You can see based on their analysis, you got a target of 145. At the time of this video is about 115. You got your mean target of 162, and then you got your high of 190. And based on their ratings, you can see moderate buy for the past 3 months. And then if you look at the breakdown, currently 7 strong buy, 1 moderate buy, and 5 holds. And then if we go look at Alphasmart, based on their evaluation, as you can see from here, they feel it's overvalued. So always a good thing to always check other sources. As you can see from this, you got the fundamentals, profitability score, company overview, and then you got your other stuff in here, financials, revenue, operating man, investment capital, financials, and then you got your other stuff right here, cost of revenue, balance sheets. You can see cash short investments, efficiency, and all that stuff. That gross margin, operating margin, ROE, and all that stuff. Okay, next on the list I want to talk about is Pfizer. Ticker symbol is PFE. This is a pharmaceutical company, one of the well-known companies in the world, in my opinion. So I think it's a solid company. So if you haven't invested in this, definitely check it out. Now, if we go to Simply Safe Dividend, based on their dividend safety score, you got a 75, which is safe. You got a dividend yield of 6.47. Again, it's undervalued. And then you got your mega cap of 151. Going over the key metrics, you can see payout ratio 65, forward payout ratio 65, dividend streak of 13 years without a reduction. And then you got your dividend growth last 5 years, 4%, last 20 years, and 5%. Again, 13 years without a reduction, 13 years of consecutive increases. Payout details: when are you going to get paid? Quarterly in the months of March, June, September, December. Get your annual payout of $1.72 per share, which breaks down to about 43 cents. And then you got your other ones right here. So again, 52-week range. It's in the low of 42, 24.80, and then you got your PE ratio right here, and then your other financials in there: payout ratio, earnings per share, sales growth, outstanding sales, total sales, return on equity, return on investment capital. Now, if we go over Simply Wall Street, based on their overview, you can see earnings are forecast to grow 11%. Earnings have grown 3.5% over the last 5 years. They feel like it's an unstable dividend track record. Now, if we go to evaluation, you can see based on their overview, it's they feel like it's overpriced. I'm not sure about this one right here. I think it's a different stuff. We're gonna have to check on that one. But if we go to bar chart, based on their price target, you got a low of 25, a mean of 31, and then you got your high of 45. Now, analysis based on it is a moderate buy. You can see from 3 months, and then your rating breakdown is basically almost the same. Currently, 11 strong buy, 1 strong sell, 12 holds. Looking over Alphasmart, Alpha Spread, sorry, you got, based on their intrinsic value, it's overvalued by 6%, and then you got your stuff over here, other things, companies profitability, and all that. So revenue, operating net income, operating cash flow, financials, and then you got your other current assets, long-term investment, and all that stuff. So last one I want to talk about is CubeSmart. Ticker symbol is CUBE. Those of you that are unfamiliar with this, it is a self-storage company. Pretty solid company. If you haven't seen this in your area, definitely one of those companies that people rely on in terms of storage. If we go over Simply Safe Dividend, based on their dividend safety score, they're rated at 61, which is safe. Dividend yield is 4.91. It is undervalued. It is a mid cap. If you look at the dividend safety score, you can see payout ratio of 77, 14 years without a reduction. And then the last 10 years, 16%. You got 10% in the last 5 years. And then you got dividend streak of 14 years without reduction, 14 years of consecutive increases. Now, if we go over to Simply Wall Street, based on their overview, you can see payout high, dividend reliable, has a lot of depth in their opinion. Now, if we go to bar chart, based on their analysis, you got a low of 45, a mean of 50, and then you got a high of 54. They rate this as a hold, and then you can see in the breakdown, 12 holds, 1 strong sell, 1 strong buy, and 2 moderate buy. Now, if we go over to Stock Rover, based on their analysis, you can see it's also a hold, 16 analysis. You got majority of them as a hold, and then you got your price targets right here, a high 57 and a low 45. And then you got your other stuff in here. All right, guys, there you have it. Those are the 3 dividend companies that, if you like those companies, definitely do more research and check them out. In my opinion, I kind of like Nucor and Pfizer. Not so sure about CubeSmart. I think CubeSmart is a solid company, but if I'm gonna go with that, with a self-storage one, I might as well go with public storage. So those are my take. Definitely check out the other videos as well. Thank you guys so much for watching. Hope you like this video. Don't forget to hit that like, subscribe, and notification bell. Stay cool, keep investing, and I'll catch you guys in the next video. All right, take care. Aloha.